Welcome to our comprehensive analysis of the AUD CHF currency pair. In this presentation, we'll examine the market performance during the week of October 13th to 18th, 2025. This period proved to be one of the most volatile weeks for this pair in the past 6 months. We'll explore the technical indicators, fundamental drivers, and key news events that shaped price action. Our analysis draws from multiple authoritative sources, including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex, to provide you with a complete market picture. Let's dive into the data and uncover what traders need to know about AUD/CHF. Let's examine the current market snapshot from TradingView as of October 20th, 2025 at 6:16 GMT. The AUD/CHF pair is trading at 0.51580 Swiss francs, showing a modest daily gain of 0.00031 or 0.06%. The previous close was 0.51549, and the pair opened at 0.51425. Today's trading range spans from a low of 0.51394 to a high of 0.51684, indicating relatively contained volatility. Volume stands at 8,240 ticks. These figures show the pair attempting to stabilize after a turbulent week, with a slight positive movement suggesting some buying interest at current levels. The tight intraday range also indicates market participants are waiting for fresh catalysts. The technical performance data reveals a clear, bearish trend across multiple timeframes. While the one-day change shows a marginal gain of 0.07%, the broader picture is decidedly negative. Over 5 days, the pair has declined 0.68%. The one-month performance shows a loss of 1.59%, and the 6-month decline stands at 1.07%. Year-to-date, AUD/CHF has fallen 8.17%, and the one-year performance shows an 11.05% decline. This consistent downward pressure across all major timeframes demonstrates sustained bearish momentum. Traders should note that short-term gains have repeatedly failed to reverse the longer-term downtrend, suggesting the path of least resistance remains to the downside. Here's the key insight from our performance analysis. AUD/CHF has shown consistent bearish momentum over the past year, with an 11.05% decline. This isn't just a temporary setback, but rather a sustained trend that reflects fundamental shifts in the relative strength of the Australian dollar versus the Swiss franc. The consistency of this decline across multiple time frames suggests structural factors are at play, not just short-term market noise. For traders, this means any counter-trend rallies should be viewed with caution and may present selling opportunities rather than reversal signals. The weight of the evidence points to continued pressure on this pair. The market is currently open and active. Looking at the technical indicators summary from TradingView, we see a neutral reading across the board. Oscillators are showing neutral, moving averages are neutral, and the overall summary is neutral. This neutral stance might seem contradictory given the bearish price action we've discussed, but it reflects the market's current state of equilibrium. After the volatile week of October 13th to 18th, the pair has entered a consolidation phase. Traders are reassessing positions and waiting for the next directional catalyst. This neutral technical backdrop suggests the market could move in either direction based on upcoming economic data or news events. The week of October 13th began with extremely thin liquidity, as is typical for Monday mornings before Asian trading centers come fully online. This thin liquidity environment made prices particularly susceptible to sharp swings. The dominant theme was escalating trade tensions between the United States and China. President Trump announced a 100% tariff on Chinese goods in addition to existing tariffs, a dramatic escalation. China responded swiftly with rare earth export control measures, raising the stakes considerably. However, by midweek, there were murmurings of potential de-escalation. Cryptocurrency markets jumped as Vice President Vance indicated Trump was willing to be a reasonable negotiator. This back and forth created significant uncertainty and volatility. Let's walk through the daily price action for the week of October 13th to 18th. Monday. October 13th saw a strong rally with the pair closing at 0.5238, up 1.28%, reaching a weekly high of 0.5252. Tuesday brought a reversal, with the pair falling 0.80% to close at 0.5196. Wednesday, October 15th, saw a smaller decline of 0.15%, closing at 0.5188. Thursday, October 16th, brought the sharpest drop, down 0.89% to 0.5142. Friday, October 17th, saw a modest recovery of 0.21% to close at 0.5153, but notably hit a weekly low of 0.5076 during the session. Overall, the pair declined 1.62% for the week, with a trading range of 176 pips. Action Forex data shows AUD CHF with a daily change of positive 0.1% and a weekly change also of positive 0.1% as of October 20th. However, the monthly performance tells a different story, with a decline of 2.07%. The 52-week range for the pair is quite wide, from a high of 0.5871 to a low of 0.4999. Looking at other Australian dollar pairs provides context. AUD USD is at 0.6502, up 0.12%. AUD JPY is trading at 97.97, up 0.16%. AUD CAD is at 0.9115, up 0.1%. The fact that AUD is showing slight gains against multiple currencies suggests the weakness in AUD CHF is partly driven by Swiss franc strength rather than pure Australian dollar weakness. 3 major news events shaped the Australian dollar during this period. First, on October 16th, the Australian dollar slipped on softer jobs data. The currency weakened below the 65-cent level against the US dollar, as a disappointing employment report revived expectations that the Reserve Bank of Australia might need to cut interest rates, reversing the previous session's gains. Second, on October 15th, the Aussie tumbled as China struck back on trade tensions. China's retaliatory measures sent the Australian dollar deeper into its downtrend, with the Fed's employment challenges adding to market uncertainty. Third, on October 14th, RBA minutes revealed no urgency for further rate cuts. The central bank kept the cash rate at 3.6%, maintaining a data-dependent approach as monthly CPI remained sticky, and the unemployment rate ticked higher. On the Swiss franc side, October 16th brought news of a EUR CHF rebound driven by French political relief that boosted the euro against the Swiss franc. However, Switzerland's growth outlook was dimming amid economic headwinds, which typically would support the franc as a safe haven. The euro to Swiss franc pair rebounded after hitting its lowest levels. In the broader market context, global markets navigated mixed macroeconomic data throughout the week. Central banks maintained cautious communication, earnings season was kicking off, and tariff tensions remained ongoing. Importantly, AUD/CHF fell to its lowest level in 6 months during this volatile week, underscoring the severity of the downward pressure on this particular currency pair. TradingView's technical indicators paint a bearish picture on the one-day time frame. The overall summary is neutral, but leaning sell, with 15 sell signals, 9 neutral signals, and only 2 buy signals. Breaking this down further, oscillators show a sell signal with 2 sell readings, 8 neutral, and 1 buy. The relative strength index at 38.50 is neutral, but approaching oversold territory. The stochastic indicator reads 24.57, also neutral. The commodity channel index is deeply negative at minus 153.82, actually generating a buy signal as it's oversold. The MACD at minus 0.00219 shows a sell signal. Moving averages tell an even more bearish story with a strong sell rating. 13 sell signals, 1 neutral, and 1 buy. Key exponential and simple moving averages all sit above the current price, acting as resistance. For the short-term outlook covering the next 1 to 2 weeks, we project a trading range between 0.5076 and 0.5252. The lower end of this range was tested during the past week when the pair briefly touched 0.5076 on Friday. A decisive break below this level could signal further downside momentum and potentially accelerate selling pressure. The upper end at 0.5252 represents the recent high from Monday, October 13th. A break above this level would be significant, potentially signaling a bullish reversal or at least a more substantial corrective bounce. Traders should watch these levels closely as they define the near-term battlefield. Price action within this range will likely be choppy and driven by news flow. Looking at the midterm outlook for the next 1 to 3 months, we project a wider trading range between 0.4999 and 0.5300. The lower bound at 0.4999 represents the 52nd week low, providing strong psychological and technical support. This level has held on previous tests and would likely attract significant buying interest if approached again. The upper bound at 0.5300 is a key resistance area that has been tested multiple times in recent months and has consistently capped rallies. The overall trend remains bearish, but we could see consolidation within this range as the market digests recent economic data and awaits clearer signals from central banks. Any sustained break of these boundaries would be significant for longer-term positioning. Let's summarize the key takeaways from our analysis. First, AUD CHF experienced its most volatile week in 6 months during October 13th to 18th. Second, while the pair fell to its lowest level, it managed to pare losses by Friday, closing down just 0.4% for the week. Third, technical indicators suggest a bearish bias with 15 sell signals dominating the picture. Fourth, trade tensions between the United States and China remain the key market driver, creating uncertainty and volatility. Fifth, Reserve Bank of Australia policy decisions and Australian jobs data are significantly influencing Australian dollar strength. Sixth, our short-term trading range is 0.5076 to 0.5252. And seventh, our midterm range is 0.4999 to 0.5300. These 7 points encapsulate the current state of the AUD/CHF market. Looking ahead, the bearish trend remains intact for AUD/CHF. Technical indicators continue to show strong sell signals, particularly from moving averages, which are all positioned above current price levels. Traders should watch carefully for breaks of the key support and resistance levels we've identified. A break below 0.5076 in the short term or 0.4999 in the medium term would likely accelerate downside momentum. Conversely, a break above 0.5252 or 0.5300 could signal a meaningful reversal. The two primary catalysts to monitor going forward are Reserve Bank of Australia policy decisions and US-China trade developments. These fundamental factors will likely determine whether the bearish trend continues or if we see a reversal. Stay vigilant and manage your risk accordingly. Thank you for watching this analysis.